Hello friends, greetings to all of you. Welcome to my channel MJS Knowledge Hub. In today's video we are going to see the concept of type of audits. You may be a student of CS Foundation or you are doing CA Intermediate. This small video will be helping you in understanding the different kinds of audits. Okay, so we are going to see statutory audit, internal audit, secretarial audit, cost audit and other audits like tax audit, bank audit, and we are not going to go deep into these things, but we will be having an overview and general idea so that you can write your answers in a better manner. And then other concepts like efficiency audit, then management audit, and so on. So without further delay, let's get started. So friends, let us now start first type of audit called statutory audit. The statutory audit is also called as financial audit, and it is the verification or trying to give the opinion of true and fair for the financial statements. What does the financial statement consist of? They consist of balance sheet, profit and loss account, and cash flow statement, right? So this statutory audit is done for the companies. Why we will do this audit for the company? Because the owners and the management of the company are two different hands, right? So the owners are the shareholders and the company is being managed by the board of directors and the management. So in order to give the owners reliance that the financial picture stated as in the balance sheet or profit and loss statement is true and fair, and the investment is properly utilized, to give this assurance to the owners, this audit is being conducted. So who does this? A chartered accountant is an independent expert who will be doing this statutory audit for the company, and he is called external auditor or statutory auditor. And section 139 to 147 of the Companies Act 2013 covers the provisions regarding statutory audit and the auditors. What does it has? Section 139 says about appointment of the auditor, 140 says about removal and resignation of the auditor, 141 says about the eligibility, qualification and disqualifications, then 142 deals with the remuneration of the auditor, 143 deals with the powers and duties of the auditor, 144 deals with the auditor not to render certain services, then 145 section deals with the auditor to sign the audit report, and 146 section deals with the auditor to attend the general meeting, then 147 deals with punishment for contravention. So these sections in the Companies Act 2013 specifies the duties and powers and deals with the auditor's work and other topics related to the audit. Then what is the main provision regarding statutory audit? What we are going to do here, the auditor will have access to all books of accounts and vouchers, and he can seek any information from the management. Then in his report he will state his opinion that whether the financial statement represent true and fair view of the state of affairs of the company. The auditor has to follow and comply with the auditing standards, and also he must follow all the required laws. He must see that the legal requirement also being satisfied, and then any qualifications he has found during the process of audit, he must report the same in audit report, and he must also specify the reason for his reason for such qualifications which he has specified in his report. And if he suspects any fraud, he must immediately report to the central government regarding the nature of fraud and what he is suspecting of. Then next type of audit is internal audit. Internal audit is nothing but you understand the checks and verifications regarding the business operation of the company, and also knowing the functioning of the overall system of the enterprise. So it is an independent activity. It is not concerned with the statutory audit. It is an independent activity and done by an independent auditor. The statutory auditor cannot be the internal auditor of the company. Okay, so it is an independent appraisal activity within the organization to have an overview of how the accounting, financial and other aspects are working in the enterprise. So the enterprise has a lot of divisions, right? So how they are functioning, are they providing the are they following the rules laid down by the company, are they following the other legal aspects which are required to be complied by the company, and then what are different types of internal controls present in the organization so that it can act as a correction or detection tool so that it can stop the error or fraud to happen in the company. So the reason of having internal audit is to have the appraisal of the working of the organization. This internal audit is not mandatory, but most organizations get the internal audit done so that they can evaluate the effectiveness and efficiency of their internal control, and they can also know how is the financial system of the companies. Okay, then section 138 of the Companies Act 2013 contains certain provisions regarding internal internal audit. Means who can do the audit, what are the provisions, what are need to be complied for internal audit to be done. Then according to Rule 13 of the Companies Account Rules 2014, this rules gives about the requirements or the class of companies who can appoint an internal auditor. So who can appoint an internal auditor? First one, every listed company must have an internal auditor, and every unlisted public company whose paid up share capital is 50 crore rupees or more during the preceding financial year. So paid up share capital is in the preceding financial year is 50 crore rupees or more, or the turnover is rupees 200 crores or more, or the outstanding loans or borrowings from bank or public financial institutions exceeds 100 crore rupees or more at any point of time during the preceding financial year. If any one of these these four conditions, the fourth one being outstanding deposits of rupees 25 crores or more at any point of time, not just in starting or beginning, at any point of time, if these limits are exceeded, the unlisted public company must also appoint an internal auditor. Then coming to the private companies, they have only two conditions: either the turnover must be 200 crore rupees or more, or outstanding loans and borrowing from bank or public financial institution exceeds 100 crores at any point of time in the preceding financial year, then they can appoint an internal auditor. So in the coming sessions we will see what is the objective of internal audit, but now we need to understand that it is the appraisal activity of the functioning of the organization, which will help us to understand the effect of internal control and the efficiency of the financial system in the organization. So these two, statutory audit and internal audit, plays a very important role. So in the coming video we will see the other two type of audit, like secretarial audit and cost audit, and later in the further part we will be seeing what are the other kinds of audit specified by the ICSI as a part of CS Foundation course, and also few aspects of what is the benefit of having internal audit we are going to see in the part 3. So hope this small revision has helped you with for statutory audit and internal audit. So keep studying and be positive. Let's meet in the next video.